So recently my Vanguard Roth IRA guide has been popping off, so I figured I'd make an update video for my Roth IRA in 2021. I'll go over my portfolio growth, my holdings, how I set up my account that'll benefit you, and actually go in and purchase a stock. Let's dive in. The first thing I want to say is to please do not compare the monetary value of your portfolio with mine. I have had my Roth IRA account for several years, and even though I wasn't able to fully max it my first couple, the most recent years I have been able to fully max it. So do not compare yourself with mine. People come from all sorts of backgrounds, support systems, and have different opportunities. The only person you should be comparing with is your past self. All right, with that out of the way, let me drink some water real quick. That's some good product placement. If you stumbled across this video, you probably already know what a Roth IRA is, but for those of you who don't, I'll quickly describe what it is. A Roth IRA is a tax advantage account where you put in your after-tax dollars, aka the dollars you make from your job, into a Roth IRA, and then when you pull it out at 59 and a half years old, you pull it out entirely tax-free. You're paying the taxes upfront now so that later in decades when you have hundreds of thousands or hopefully millions of dollars in your Roth IRA, all of that can be pulled out tax-free. That is the power of a Roth IRA. Vanguard is one of the most reputable companies to have a Roth IRA with. Vanguard is a very popular platform to invest in because they offer a variety of low-cost index funds. Vanguard has a desktop platform where you can open an account, look at your portfolio, and do all of that, but I will be using the Vanguard's mobile app to update y'all on my portfolio. All right, so I have my Vanguard app pulled up and I just logged in, and the first thing I see is that my Roth IRA has a total worth of $37,809.91. Dang, that's a lot. And apparently my investment returns has been up by 20.9% since January of last year. Now, when I made my Vanguard Roth IRA guide video, it was sometime in the middle of the year, and my portfolio was actually at $24,000. That was when the market tanked and it hadn't really recovered to the extent it is right now, where it's breaking through new records, which is just absolutely insane. One thing to note is my investment returns is solely from my investments. This does not include the $6,000 that I put in a couple weeks ago for 2021. Here we can see the history of my balance over time. I actually had my Roth IRA in TD Ameritrade up until like 2 years ago. So you can see that in March of 2019 is when I first initially opened up a Vanguard Roth IRA. I transferred all of my funds from TD Ameritrade to Vanguard. And that's why the history of my portfolio balance starts in 2019. But you can see in March of 2019, so almost a little less than 2 years ago, I had a portfolio balance of $11.5 thousand. And then the past 2 years, I've been able to max it out every single year. And then now I have the $37.9 thousand total. Every single month, you can see my contribution as well as my investment returns. Now this graph combines both my contributions or purchases as well as my investment returns. But if we go to the next graph, we can see the purchases and withdrawals I have. I don't have any withdrawals because I haven't withdrawn anything from my Roth IRA, but you can see all the purchases I've made where I've contributed more and more money over time. And then if we go over to the next graph, you can see my investment returns. This is where it gets really interesting. So very typical for the stock market, it is very volatile, meaning it goes up and down constantly. It's always in flux. And at the beginning, my returns are pretty positive. There is a tiny dip right here. And then boom, this is where the stock market tanked in March of 2020 because of the pandemic. But if you held strong and didn't sell anything, that means your losses were only on paper. If you did sell stock during this period of time, then you would have locked in all of your losses and lost probably an incredible amount of money. But luckily I knew better and I held on to all of my stocks. And eventually it did bounce back and hit new records. One thing I always tell people is that the stock market is not the same as the economy. The recent times has made it really clear that even though a lot of people are suffering from job loss and lack of money coming in, the stock market continues to rise. One way to explain the huge difference between the economy and the stock market is that the stock market is a representation of how rich people feel. Those with disposable income or those diligent enough to save money and invest. So again, the stock market does not equal the economy. Alright, so that's my portfolio growth. Let's dive into what I'm actually holding. So if we go into my accounts, my IRA summary, you can see that I've already maxed out my $6,000 contribution for 2020 and 2021. So let's go into what I have. So I keep my Roth IRA very simple. I only have two funds. They're both Vanguard low-cost index funds. One and my main driver where I have 80% of my portfolio in and 80% of all my contributions in is VTSAX, which is the total US stock market index fund. I have about $25,000 in this fund, and in total this fund has gained me about $6,000. Keep the very low expense ratio of 0.04%. This means that every year 0.04% is taken out as a fee to manage this fund, which doesn't really need a lot of managing because it's a low-cost index fund, so 0.04% is awesome. I would say anything under 0.2% is pretty low cost. The other fund I have, which makes up about 20% of my portfolio, is VTIAX, which is Vanguard's total international fund. I have about $12,000 into this fund, and it has made me about $1.3 thousand. It has an expense ratio of 0.11%, which is pretty low. All right, and here, let's dive into my asset mix in the top left corner. So right off the bat, you can see that my entire portfolio is 100% stocks. This is because I don't plan on retiring and withdrawing money from it for a very long time. So I want my money to grow as rapidly as it can, and I do that through the stock market. Now there are bonds which are a lot less volatile but don't grow at the same rate. They grow slower. All right, to go into stocks, my portfolio right now is actually about 2/3 total US stock market and 1/3 total international. I'll explain why in a second, but usually it's 80-20, 80 domestic and then 20% international. So going to the domestic, you can see the breakdown of my large, mid, and small cap. This is just an indication of the value of the company on the market. Companies that are valued highest, like Microsoft, Amazon, Tesla, are large cap, and then companies that have a mid and small cap have a lower valuation on the stock market. My percentage of large, mid, and small cap companies is 100% driven by VTSAX because it's the only domestic fund I have. We can see that the fund is a good blend of growth and value companies, and then we can look at the sector breakdown of the fund. Now, if you had other funds on top of this, you'd be seeing a different percentage for each sector, but since I only have one fund, it just totally drives my percentages. And right off the bat, we can see that the information technology sector is the sector that VTSAX is most heavily weighed towards. After that, it would be healthcare, then financials, consumer cyclical, and then telecommunications. All right, so let's go back to my international. We can see the portfolio breakdown of my international stocks based on regions around the globe. Europe has 38.6% of the international part of my portfolio. The Pacific, 28.7%. Emerging markets, 25.6%. I like to keep my Roth IRA very simple and have a hands-free approach with it, but one thing you can do is actually invest in individual stocks in your IRA, because if you plan on selling those stocks under a year, you pay short-term capital gains taxes, which are very high compared to the long-term capital gains where you hold the stock for at least 1 year. But because it's in a Roth IRA and you don't get taxed, you can buy all these individual stocks, sell them whenever you want, and not have to worry about your taxes. There are a couple things that you really want to do when you set up your account, and one of which is setting up DRIP, or a dividend reinvestment plan. And if you go into my transaction history here, you can see that every single time one of my funds has a dividend, it gets automatically reinvested into that exact same fund. Now with Vanguard, I set this This is just how I set up my dividend reinvestments, so I don't have to worry about it and manually go back. Because if you don't set this up, you'll just have your money sitting into your account, not invested in anything, which is essentially cash, and it's much better to use your money to make more money. Another thing you'll want to set up is automatic contributions into your account and directly buying the funds you want. This is excellent if you don't have a lot of money right away. You could do $500 at the first of every month to max out your Roth IRA. Or if you are a diligent saver, you can save up $6,000, which is the max, and dump it all in January 1st of the next year. Why would you want to dump all of your money in all at once rather than spreading it out? Because statistically, if you have the money already, it's better to dump all of it into the stock market than to spread it out over time. This is because on average, the stock market grows. So if you don't dump it in all at once, then you're missing a lot of the growth that comes with that. So if you spread out your investments incrementally over time, you're missing out on all the stock market growth that happens between that first time you invest and that last time you invest. So I mentioned that my portfolio allocation was off, where I had about 1/3 in international stocks and 2/3 in domestic stocks, and usually it's 80 domestic and 20 international. This was because in my last transaction, I had accidentally used the 80% of my $6,000 contribution and bought the wrong fund. I actually bought the total international fund with the majority of my money. So I am going to go in and correct that. So I spent about $4,622 on the international fund. I can easily go to buy, sell, and exchange. And since my money is already in the funds, I don't have to buy more funds. I can simply just exchange my Vanguard funds. All right, so I just select the fund I want. I want to transfer money from my total international into my total stock market fund, which is my domestic fund. So I can enter amount, $4,000, and then I can go from there and actually confirm it. Overall, I think my Roth IRA is doing really well. It simply grows with the US stock market and the total international stock market. So as long as those two are growing, then my portfolio is growing. If you want to know how to actually set up a Roth IRA with Vanguard and invest step by step, I'll leave a link in the description below on my Vanguard Roth IRA guide. And feel free to check out all of my other investing videos because I heavily tailored those towards beginners and stuff I wish I knew when I first started investing. Thanks for liking. Smash the like button if you like smashing things. I'll see you all later. Peace.